Let's talk to Mike Van Dulken. He's the head of research at Accendo Markets. Very good morning to you,
Morning.
Mike. Right, let's talk the UK banks. You've sent two slides. We're going to cover Lloyds and Royal Bank of Scotland. Let's kick off with Lloyds Bank. Chart, good looking. Any reasons to be bullish here?
Well, I think, as I said, I think last time I was here, markets have become quite short-termist still. They're looking at these strong moves we're seeing. A lot of people are forgetting to look way further back for what could be incoming resistance that may only be 6, 9 months, 12 back. But you've got to be aware of that. I think last time we looked at HSBC, it was something like 17-year falling highs resistance.
Yep.
Scuppered the uptrend and stopped the shares in their tracks at £8. So this, I think, is very key to look at levels going back to very late 15, early 16, around the 73.5 pence mark. Could see the Lloyds rally slowed up at the very least. Whether it triggers a reversal back to 61 that we saw in mid 17, unsure. For the moment, sentiment is fairly positive towards these banks. I don't think we can say we're in the middle of a hiking cycle for the Bank of England, but Lloyds is a cleaner bank. It's back to profit.
Yep.
It's paying dividends.
Yep.
Those dividends could be set to rise. PPI is not quite a thing of the past, but it's very much less of a quarterly issue. So the positives are mounting up more than the negatives are weighing. If investors want to see those shares break above 73.5, it just probably open the door to just.
But that is a massive chart point, isn't it?
It's huge, absolutely huge. You know, we're looking at 2-year resistance. If we get above that, open the door to 77 point, well, that's nearly 78, if not 81. You know, before we know it, you know, we could be back to the levels we haven't seen since mid-15, which seems like a very long time ago.
Okay, that's very good homework. Let's move on to the Royal Bank of Scotland. Wow, this is breaking up and out.
Yeah, I mean, if anything, we can say, I mean, this is a weekly chart. So if we go on the 3 candlestick rule, we'd want to see this week's candlestick, we're in the middle of it now, hold up as support before we kind of confirm the breakout. But if that is resistance turns support at 291 and a bit, that does bode well for the shares continuing that uptrend that goes back to mid-16. It's kind of a rising channel, although it's much shallower through 2017. You know, could that see the shares up to 370 or thereabouts? RBS is still more of a turnaround story.
Yep.
You know, it's still in the clean-up process. There's still some legal overhang in the US. You know, it's not quite there yet, and it's certainly not ready to pay dividends. In fact, the government wants to continue selling down the stake, but it can't really do that. Once you get more of those headwinds behind it, it may be in a position to benefit a bit more like Lloyds. But for the moment, there isn't quite the resistance. Maybe something around 350 through the very late mid 15 to late 15 level. But for the moment, you know, the bias there certainly is that, you know, investors want to be long of this. You know, 370 is actually a hell of a long way off.
Yeah, Mike, very good work. Thank you very much.